It's customary every Diwali for me to speak to Rakesh Jhunjhunwala, India's most loved investor. So here I am again to talk about how the last 1 year has been. Rakesh, good to speak to you as always, and wish you and your family a very happy Diwali first. I remember last Diwali when I was talking to you, you had sounded a little disappointed with the performance of your portfolio. But one or two stocks had not done very well, and you said it was a challenge for you to bounce back this year. So how have the last 12 months been since last Diwali? Are you happier this time than you were at the same time last year?
Anyway, I wish a happy Diwali to you and to everybody else. Well, as far as my portfolio is concerned, all I can say is a happy Diwali. It's financially a happy Diwali for me. The year has been good. I won't like to comment beyond that, in spite of the fact that Lupin and Crystal have not done well.
I know Lupin's been a bit of a sore thing for the last couple of years, but you know, it's been almost 2 or 3 years that the pharmaceutical sector has been out of favor for the market. Do you get the sense, Rakesh, that now with so much pessimism around the sector, we might be at the darkest hour and maybe the sector is slowly forming a bottom out here?
See, I wouldn't like to... I think the sector would be near a bottom. I would have already made a bottom. But I think the rebound will depend script-wise. See, everything that could go wrong for the pharma industry went at the same time. The US market got very competitive, the rupee got depreciated, and they had very bad sales domestically because of last year, the first quarter we had GST. So I would say the worst is behind us. The rebound will depend a lot on the companies, on the individual companies.
But what is telling you that the worst may be behind? Is it the price performance of the stocks which is showing you some sense of a bottom, or any of these factors that you alluded to just now? Do you think they have started reversing?
I think the US market pricing has made a bottom. I've never seen such fright and such recognition that the US market is not going to be good. I mean, Amazon is going to say sell medicines. People are so bearish. I think it's very positive, because Indian pharma will have one more buyer. Instead of there having 3 buyers, in generics there will be one more buyer. The more the buyers, the better it is. So just because Amazon is going to do something doesn't mean prices are going to crash. Second thing I think is, at these rates, a lot of companies will drop out for investment into generics. And the real money should be made in complex generics now, for which very few companies have the money and the capability. So I personally think pricing in US has peaked. I think the rupee has stopped. I mean, I think the way is rupee is 65, say around 65 now. It had gone to 60, 75. I think rupee will go to 66, 67. And the local market, it was just a temporary disruption. It had to come back, I think, which it has in the second quarter. So I think the causes have reversed. There is a fair amount of pessimism. And there is too much pessimism about the US generic market and not pricing there.
But how do you go about choosing stocks in the sector, Rakesh? Because it appears to be that even if pharma bottoms out as a sector, it will still be probably a stock-specific kind of a play, not an IT sector kind of a vanilla play. But I know you've got holdings. Lupin is your biggest holding, but you also have exposure to names like Aurobindo Pharma, Jubilant Life Sciences. How do you go about cherry-picking in a sector where the dynamics can be very disparate between companies?
I think people who have very large business in India are going to do well, regardless of what happens in America. In America, those who can go to complex generics, who've got a good pipeline, whose research costs are not very high, I think they'll do very well. See, longer term, India is like a FMCG market for medicines. It's going to grow at 15% every year. And I think the rupee is also, topped. And now individual companies, I mean, I won't like to discuss them. You have to have your own way of choosing them. And let me make a disclosure. I own all the 3 shares that you have told me, that you have just said, and I'm interested in everything that I say. In this program, please consult an investment advisor before buying anything.
The other theme, Rakesh, that you're very bullish on, obviously from a look at your portfolio, is the whole financialization of savings theme. I mean, you own names like Edelweiss and Geojit. These stocks have done remarkably well in the last 1 year. But do you think they're good for much more? I mean, this whole theme, do you think it will expand even more exponentially from here?
I don't know if the price will expand or not, but the business will expand, that I know. and I won't like to comment on individual stocks. But the story of the financial savings, getting huger and huger, and or large part of the savings in the household sector being invested in equity, I think it just started. So from that point of view, but I agree with you that valuations are not easy. So some of it has been priced in also.
What's the best way to play this, Rakesh, according to you? I mean, is it through brokerages? Is it through insurance companies? Is it through private banks who've got a leg in many of these pieces? I mean, what's the best way to approach a theme which is fleshing out so nicely?
Take your choice. I haven't done any research. And then I would like to speak more about the general market than about financial sectors and specific investments and all that.
The reason I ask you, Rakesh, this question is because a significant part of how well the market has done is dependent on this kind of money which is coming in from domestic investors. Do you see that as a secular theme and being such a continued source of support for our market going forward?
See, boss, I have been shouting that Indian money into the markets is going to come, it's going to be a flood, it's going to be a tsunami. I think it's not even reached a flood. Because to my common sense, in a growing economy like India, with reasonably good corporate governance practices, tax-free, I think India will grow nominal GDP 12%. I see no way that Indian equity will not give you a return of 15%. Now you tell me one investment where I can sit in my office, have a liquid investment, borrow against it at very fine rates, and get a 15% return. I don't see many investment opportunities like that. So by my sheer common sense, I feel that this money is going to continue. And I think this is not even a flood, it's going to be a flood and it's going to be a tsunami. Because first, in America, investments in mutual funds, in equity, mutual funds went up from around $62 billion in 1984-85 to $1.3 trillion in 94-95. So once this starts and people gain, there can always be a flood. And you are living in a country with at least $400 billion of household savings. Indian equity wealth, household wealth in equity in India is 4%. In China it's 9%. In America it is 29%. So I have been shouting for the last 25 years, last 10, 15 years, but this has now finally happened. And I think this money is just, little has come. There's going to be a flood, it's going to be a tsunami. So I see no way that Indians will not invest on a continuous basis in mutual funds. Earlier, there are 2 times, and also, a lot of the investment by Indians in mutual funds and equity has been delayed because of the 2 scams that we had. I don't see any sign or the smell of a scam now.
And how does this sit with the way global investors are viewing the Indian market right now? Because Indian investors seem to have just about getting into the habit of putting money through SIPs into mutual funds. But if you speak to global investors, they seem less optimistic. They are worried about valuations in India, and periodically they're withdrawing money from the Indian equity markets. How do you resolve these two, and how do you see trends in global investment flows now?
I personally feel the selling by the foreigners will reverse. See, it's going to depend a lot on US interest rates and interest rates worldwide. And there is a divided opinion in the Fed that whether they should wait for inflation to come to 2% or they should increase the rates even if the inflation doesn't come to 2%. My personal judgment says the Fed will raise, but in a very, 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 very measured manner. So once that is clear, the interest rates in US will not go up, right? And India has never had such a stable macro with the currency, with inflation, with the fiscal deficit. So I think it's not real far away that the foreign money will stop. And in the stock market, there's a rule that if there is a seller, whoever he may be, and the market keeps gaining, that seller does withdraw and has to withdraw. And if the market keeps losing and there is a buyer who keeps buying, he will have to withdraw. हमारे शेयर बाजार में कहानी कहते हैं कि बेचने वाले को हटना ही पड़ता है और लेने वाले को ही हटना पड़ता है. So I think in face of the continuous rise of the market, right, and about US interest rates, I personally have the opinion that the selling is already moderated and I think it will reverse in a month or two.